Microsoft, from garage startup to AI empire, and where the stock could go next. Microsoft is no longer just the company behind Windows. Today, it sits at the center of the global AI revolution, with a market valuation hovering around $3 trillion, competing directly with Nvidia, Apple, Amazon, Google, and OpenAI-backed ecosystems for control of the future of computing. But here's the bigger question investors are asking in 2026. Can Microsoft justify its massive valuation, or is AI enthusiasm running ahead of reality? In this video, we'll break down Microsoft's rise from a small software startup, the transformation under Satya Nadella, how AI changed the company forever, the biggest risks facing Microsoft today, and where the stock price could realistically go over the next 5 to 10 years. Section 1: The history of Microsoft. Microsoft was founded in 1975 by Bill Gates and Paul Allen. Its first major breakthrough came when IBM selected Microsoft's operating system for the original IBM PC in the 1980s. That single deal changed computing history. Windows eventually became the dominant operating system globally, and Microsoft turned Office, Word, Excel, and PowerPoint into the standard productivity suite for businesses worldwide. By the late 1990s, Microsoft became one of the most powerful companies on earth during the dot-com boom. But the company later stagnated. Under Steve Ballmer, Microsoft missed major technological shifts. Smartphones, search, social media, and mobile operating systems. While Apple created the iPhone and Google dominated search, Microsoft remained heavily dependent on Windows and Office. Then came one of the most important leadership changes in tech history. In 2014, Satya Nadella became CEO. And Microsoft transformed completely. Section 2: The Satya Nadella Transformation. Nadella shifted Microsoft away from old-school software licensing and toward cloud computing. That move created Azure. Today, Azure is one of the largest cloud platforms in the world, competing directly with Amazon Web Services and Google Cloud. This changed Microsoft from a PC software company into a global infrastructure company. Instead of selling software once, Microsoft began earning recurring subscription revenue through Microsoft 365, Teams, Azure, Enterprise Security, and Cloud Services. The results were enormous. Microsoft's market cap exploded from under $400 billion in 2014 to over $3 trillion in 2025 and 2026. Revenue now exceeds $300 billion annually, with profits above $100 billion. And then AI arrived. Section 3: The OpenAI bet. Microsoft made one of the smartest strategic investments in modern technology history. In 2019, Microsoft invested in OpenAI long before ChatGPT became mainstream. That partnership gave Microsoft early access to GPT models, massive AI credibility, and a huge advantage in enterprise AI integration. Microsoft rapidly embedded AI into nearly every product. Copilot in Office, AI inside Windows, GitHub Copilot for developers, AI-powered Azure infrastructure, AI cybersecurity, and enterprise automation tools. This is where Microsoft became different from most AI companies. Unlike startups, Microsoft already had billions of users and enterprise customers. So instead of building AI from scratch, it plugged AI directly into products companies already use daily. Analysts now estimate Microsoft's AI revenue run rate exceeds $37 billion annually, while Azure AI growth continues accelerating. The company also reported over 20 million paid Copilot enterprise seats. That's important because Wall Street no longer wants AI hype. It wants AI monetization. And Microsoft is one of the few companies actually generating real AI revenue at scale. Section 4: Why investors are worried. But despite all the optimism, Microsoft stock has become volatile in 2026. Why? Because AI is incredibly expensive. Microsoft is spending tens of billions on GPUs, AI chips, data centers, cooling systems, cloud infrastructure, and AI model training. Some estimates suggest Microsoft's annual AI capital expenditures could exceed $100 billion. And investors are beginning to ask difficult questions. Will AI profits arrive fast enough to justify the spending? Some hedge funds have already reduced Microsoft exposure because they fear AI could compress margins and disrupt Microsoft's traditional software dominance. Even Microsoft bulls admit there are risks. AI competition from Google and Amazon, OpenAI dependency, slowing Azure growth, and the possibility of an AI valuation bubble. At one point in early 2026, Microsoft lost hundreds of billions in market value after investors reacted negatively to rising AI spending and slowing cloud growth expectations. But here's the key distinction. Most companies are spending on AI hoping it works. Microsoft already owns the ecosystem. Enterprise software, cloud infrastructure, developer tools, and enterprise distribution. That gives it a huge advantage. Microsoft's future business. Over the next decade, Microsoft could evolve into something much larger than a software company. It may become the operating system for AI-powered business itself. Think about it. AI agents replacing workflows. Autonomous coding. AI-powered cybersecurity. AI office assistants. Enterprise automation. And cloud-based AI infrastructure. Microsoft is already moving toward agent mode systems where AI performs tasks autonomously instead of simply answering prompts. And unlike consumer AI companies, Microsoft dominates enterprise trust. Large corporations already rely on Microsoft for security, compliance, communication, and cloud storage. That trust matters enormously in AI adoption. Section 6: Future Stock Price Prediction. So where could Microsoft stock go next? Right now, Microsoft trades around $3 trillion market cap, roughly 24 times earnings, and over $400 per share. Analysts remain broadly bullish, with some average price targets approaching nearly $587. Here's a realistic framework. Conservative scenario. If AI growth slows and margins compress, Microsoft may trade sideways between $350 and $500 for several years. Base case. If Azure and Copilot continue strong monetization, the stock could reasonably reach $600 to $750 within 5 years. Aggressive AI dominance scenario. If Microsoft becomes the dominant enterprise AI infrastructure platform, the company could eventually exceed $5 trillion in market cap over the next decade. But achieving that requires sustained AI adoption, strong enterprise spending, and proof that AI profits exceed AI infrastructure costs. Conclusion. Microsoft's story is no longer just about Windows. It's now a battle for control over the future of artificial intelligence infrastructure. The company has one of the strongest balance sheets in the world, one of the most powerful enterprise ecosystems ever built, and arguably the best position to monetize AI at scale. But investors must also recognize the risks. Massive spending, rising competition, and extremely high expectations. The next decade may determine whether Microsoft becomes the backbone of the AI economy, or whether today's valuation already prices in too much optimism. Either way, Microsoft remains one of the most important companies in the world economy.